morning everyone, this is Amit Pabari, founder and managing director of CR Forex. Generally in the economy, we will observe that interest rate in the short period of time is lower as compared to longer period of time. Example लेते हैं, 3 months FD rate is close to 4.15% annualized and 1 year FD rate in India is close to 6.5%. कहते हैं कि लॉन्ग टर्म में रिस्क होता है, इसीलिए longer term interest rates are higher as compared to shorter term interest rates. Now let us see what is happening in US bond market. 3-month US bond yield is quoting at 5.47% and 10-year bond yield is quoting at 4.91%. It is exactly opposite of a normal scenario. Shorter term interest rates are higher and longer term interest rates are shorter. Technically इसको कहते हैं inverted yield curve kind of a situation in US economy. Generally when there is an inverted yield curve kind of a situation in any economy, they say that economy can move into recession. 1978 से लेके 2023 kind of a scenario के अंदर पे the yield curve has inverted 4 to 5 times and they say जब से inverted yield curve होता है 15 से 20 महीने में इकोनॉमी जो है वो रिसेशन में जाती है. Still the past performance does not indicate कि ये फ्यूचर में भी होगा. But what does it indicating right now? It is indicating that economic situation in US is getting slower and slower. That is first. Second, credit is going to get tightened in US economy in coming days because businessmen and consumers will not like to borrow at higher rates. Now let me show you one more interesting chart. If you see the table, you will able to understand that most economic data in US have started weakening or they are coming neutral. There are only few data points which are showing strength. Based on that, we can conclude that Fed is not going to increase the interest rate very aggressively, and because of which dollar index in coming days can move towards 102.50 to 103 kind of levels. Now let us discuss outlook for rupee. There are few challenges because of which rupee is under pressure, like 10-year US yield is trading at multi-year high. Crude and gold prices are moving higher because of Israel and Palestinian war. Chinese and Japanese currencies are also trading higher. Despite all the challenges, rupee has been trading stable and it has not broken 83.30 because of RBI intervention and flows coming into Indian equity market. Going forward, we expect dollar index to reverse and market will ignore Israel and Palestinian war. Just they have ignored Russia and Ukraine war after a certain point of time. Because of these two reasons, we expect that rupee to continue to trade between 80 to 90 on the lower side and 83.30 on the higher side. Once 80 to 90 is broken, then there are higher probability that the pair can move towards 82.5 kind of levels. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporters. Lot of thin margin exporters have been saying us that rupee is trading in a consolidating range between 83.10 to 83.30 and there are higher probability it can move towards 83.5 to 84 kind of a level. So there is no point to cover exports on a back-to-back basis. Now we have been telling exporters that why they should be hedging. Reason number one is their costing is getting higher and higher day by day. So currently lot of thin margin exporters are taking costing close to 83 to 83.15 kind of level. Second reason why they should cover is that the commodity prices are very volatile. So they are facing commodity risk and business risk in their business. So it is important when they are facing commodity risk, they should at least hedge currency risk. If they are hedging on a back-to-back basis, they can avoid the currency risk. So basically what is the strategy for coming days? Strategy remains same. Cover 80 to 85% of open exposure between 83.15 to 83.30 kind of a level. If you are waiting, keep a strict stop loss of 83.05 or costing whichever is higher. Now let us discuss strategy for thick margin exporters like textile exporter or engineering exporter. The strategy for them is very simple. If you are hedging against confirm order between 83 to 83.30, cover 80 to 85% of your exposure. If you are covering basis on anticipation order, then you should cover 50 to 55% of your exposure between 83 to 83.30 kind of a level. If you are waiting, then please keep a strict stop loss of 80 to 90. If 80 to 90 is broken, please go and cover. Now let us discuss strategy for importers. Importers must appreciate the fact that we have advised them that they should not create a panic button and buy aggressively for longer term imports. And Rupee has moved in the same direction. Rupee has been consolidating between 83 to 83.30 kind of a level. Now for coming days, we will follow the same strategy. Importers should buy only 50% of their import payment which is payable in next 15 days between 82.95 to 83.05. With this, I would like to end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.